two trades that I took and we took here today. Number one, we're going to be talking about the main focus of tonight's lesson is when the risk is just a little bit too wide. It's something that a lot of traders greatly overlook before they enter into a trade, and they will still enter thinking, it's close enough. I don't want to miss the trade. And that's a big problem for obvious reasons. You're going to end up with too much size, or you're not going to get it to a place where you're going to be able to get in profit because the risk is too much. Also, our first trade that we'll discuss is a trade that I took because obviously my skill set is I have a decade of experience trading. And right now we're really working in the room with traders on how to properly get sized up. So I did execute a trade long on SPY, and I'll discuss why I wanted members not necessarily to take it. And so we'll get into the charts and we will have a nice little discussion here this evening. Hang tight, one sec. Okay, so now that we are into the charts, you can see my SPY day trade here on options, locking in roughly about 100% from my best entry up to my best sell. Obviously, could have been a little bit better on the sell, but I'm very busy in the late mornings running my farm here in the mountains of Costa Rica. So that is fine. Now, what you're going to see for an entry, and I'm going to zoom in a little bit now that we can definitely see the chart and how ballistic it went. We opened up and it just very close into the level, executed coming down into the level, and then just kind of played with the chart. Now, I was guiding members through this trade idea so that they could spot what I call natural movement theory, which is proprietary to Tricktrades. It's one of my price action theories that I use to teach. And it's something that works extremely well. It's essentially like like having a crystal ball. So I was talking a lot about SPY, but we were in fact wanting to trade Qs. And I'll get to that here in a minute, folks. So executed the trade and then was just playing with it. Obviously, didn't stop me out. My risk on this was essentially pre-market lows and a confirmed break of pre-market lows. It came nowhere near that. So I was very safe and comfortable in this trade. Paid myself the vast majority on this push up. Really, really nice trade. And then just patient with a small amount of contracts left. Locking in $4,105 on this trade long on SPY. Now let's talk about Qs. Now, I ended up executing this trade when it did come up into our starting point on this, and I obviously wasn't going to piss around. This was still showing great signs of strength. So I locked in $1,430 on this trade, even though it didn't do much, and that's fine. We're looking for first reactions into the level. But this morning session, now, normally if you take a look here, this is the previous close right there. And then our level is here. So from the previous close to that level is 44 cents. Okay. Now that is an acceptable level of risk to start in. We needed it there. And I'm going to show you why. When you check where we topped out into that first level is only 30 cents, right? But now add the actual level that we're watching. We're starting to get into that 77, 80 cent zone. It's too wide. It's too far, especially if you're trading with small size. You'll never get it back. You need the ability to add an average when you are dealing with wider risk. Could I have taken it? Absolutely. But this is the trade that we were walking through members to really focus on and be patient for. So I didn't want to execute that trade until it actually triggered. Now, as it comes up into this level right here, this is where I enter. I enter into the previous close, which is our starting point, right? Right to trade plan that is given every morning at 9 a.m. and paid myself on the wash back down to natural, which is exactly what it did. That's my entry, my sells. And then one more time as it pushes up and through, and then pay myself on it, get out the rest. This thing is curling up. It's still very strong. It does not want to break down. It's not worth taking. So now I just want to talk a little bit more before we wrap this up about the discussion of risk. This is where a lot of traders will fail big time. They don't snap their crosshairs. There's a reason why we have crosshairs on our on our charting platform, that's going to show us exactly how far away these stocks are coming within a level. Now, if you're saying to yourself, oh, it's close enough, without snapping those crosshairs, sometimes these charts, or you'll tell yourself, oh, well, it looks like it's close enough. No. A lot of the times during the day and during intraday price action movement, it's very deceptive. Like the way the chart looks, it depends on how much range is out there, right? If there's a lot of range, it can look like this far away from that level, but in fact, that's over a point away. You understand what I'm getting at? And that's something that is just greatly overlooked. You need to wait for your actual trigger. A lot of traders throw around the term like trigger, right? What the trigger is, your trigger for your trade, but they won't respect it and they won't wait for it. And that's a sign of impatience and lack of discipline. Those two things will absolutely destroy you as a trader. So it's important to wait for these levels to actually trigger. Wait for your trade plan to properly trigger. And I know there's a lot of people that are out there, you know, watching these videos, and that's great that you're watching them. I just hope that you're actually using this information to change your trading, because you have the ability to do so. What I'm telling you, this isn't coming from a place from an inexperienced trader. This is coming from a place of a trader that has a decade of experience and has found great success as a trader. So you'd be wise to listen. Just wait for these things to come to the palm of your hand, guys. They will come and it will trigger. You will get a trigger short or you will get a trigger long. That's why we have both. We have a long and a short ready to rock and roll every morning. And it's important that you wait for these. So on that note, folks, we do have a new series out. It is actually a revamp of a series that we launched about, 4 or 5 months ago, called The Truth Behind the Trade. The way that we're doing it now, I absolutely love. We are going to have a brand new episode. We're going to be recording tomorrow. The first one out is on YouTube. I posted it this morning and posted it on X as well. Check it out. It's full of amazing free information and education. We'll be recording another one tomorrow. We're going to be releasing a minimum of 2 per week. We want to do actually 3 or 4 per week. We want to give you as much content as possible to basically really start helping you guys out there that are struggling with trading. So we're going to be recording our second one tomorrow. Be on the lookout on those. They are important. You don't want to miss these. So on that note, folks, if you want to learn how to become a consistent and professional trader, come to tricktrades.com. We have a full risk strategy, a full entry strategy, as well as in combination, our sizing strategy, the 3 pillars of success. And it does work and it will make you a successful trader. So on that note, folks, have a wonderful evening and we will see you tomorrow. Adios.